All right, let's get into it. Everyone's trying to predict the next big thing for 2026, but you know what? The real money, the serious money, is moving somewhere else entirely. So today, we're going to ignore the flashy headlines and follow the deep, powerful forces that are quietly reshaping our world.
I mean, we're all wired this way, aren't we? We're always on the hunt for that next game-changing idea, that one breakthrough that's going to change everything. But what if that's kind of the wrong game to be playing? What if the biggest opportunities aren't in what's new, but in what's absolutely necessary?
And this quote from Václav Smil, man, it just hits the nail on the head. It's such a powerful idea. The biggest economic shifts don't happen because of some wild new invention. Nope, they happen when our most essential systems start to break, when they hit their physical limits. Capital isn't just invited to the party, it's forced to show up. And that's the core idea we're going to unpack.
So that leads us right into our first major principle: force capital flows. The smartest play isn't always about inventing something brand new. Sometimes it's about planting your flag right where capital has no other choice but to go. Let's see how this works.
So what exactly is a forced capital flow? Well, as you can see here, it's this huge, unavoidable wave of investment that has to pour into our foundational systems once they've hit a wall. Think of it like a river that's been dammed up for too long. Eventually, that water has to go somewhere, and it's going to be powerful.
And here's where that pressure is building up right now, heading into 2026. I mean, look at this list. We're talking about the absolute bedrock of modern society. Energy grids are getting slammed by data centers. We need mind-boggling amounts of computation for AI. Our food systems are strained. This isn't about trends or opinions. This is about thermodynamics. It's about scale.
And this quote from Ray Dalio really gets to the psychology of it all. This isn't about people being optimistic and excited. It's about fear. The real signal, the tell, is when the people in charge are more scared of doing nothing than they are of making a bad investment. That's when you know the flow is real.
Okay, so this brings us to the next big idea: how to profit from friction. Most of us see constraints, regulations, bottlenecks, red tape, as problems we need to avoid. But what if we've got it all wrong? What if those are the very places where real, defensible value is created?
And this slide illustrates the difference perfectly. Peter Thiel makes this super critical distinction. See, inefficiency is just bad. It's sloppy and it pushes capital away. But friction, that's totally different. Friction is when progress is desperately wanted, but something is blocking the way. It actually concentrates capital. It's not a problem to be solved, it's a moat to be owned. It's where monopolies are quietly born.
Elon Musk's take here just drives that point home. The biggest opportunities are almost always hidden inside the messy, complicated, politically charged problems that everybody else is trying to run away from. Things like permits, tangled supply chains, regulations. Those aren't distractions from the main event. They are the main event.
So how can you tell the difference between a real, durable moat and just a temporary headache? Well, this slide gives us a pretty good checklist. A real opportunity, a durable constraint, is something that you can't just solve by throwing money at it. It's tangled up in politics or culture or the hard laws of physics. Just raising prices doesn't fix it. It's a complex puzzle. That's where the real lasting advantage is.
All right, this leads us to our third principle, which I love: the quiet money rivers. You see, while everyone is chasing the big, flashy, headline-grabbing companies, the truly steady, reliable money is often flowing through the quote-unquote boring businesses that support the stars of the show.
This table is such a fantastic way to see it. Everybody's attention is on the next big AI platform, right? But look at the whole ecosystem that has to exist around it. The really durable cash flow, it's in the essential services, the companies doing the integration, the specialized training, the compliance software, the maintenance. These are the quiet rivers that get all the benefits of the gold rush, but often with way less risk.
And I love this quote from Brad Jacobs: "When demand is forced, boring becomes beautiful." It just perfectly sums up this whole strategy. It's not about being sexy, it's about being indispensable. And that's where fortunes are quietly built, year after year.
But listen, for every winner, there's always a loser. And knowing when to get out is every bit as important as knowing when to get in. So this next part is all about how to spot the structural losers, the industries that are secretly in decline, even if the headlines still look okay.
The anatomy of a collapse, it almost always follows this simple but incredibly dangerous path. First, an industry looks totally stable.
That stability then breeds complacency. All the investors, all the leaders, they just assume the good times are going to last forever. And that false sense of security, that's exactly what comes right before the fall.
So what are the warning signs you need to look out for? This slide is your practical checklist. Is the company just pulling cash out instead of reinvesting it for growth? Are customers quietly slipping away? Does the whole business model fall apart without cheap debt? When you see leadership stop talking about strategy and start pointing fingers, you're in the danger zone.
And this right here is the key takeaway for this entire section. Think about it. Missing the next big thing, that almost never bankrupts you. But clinging to yesterday's winner long after its foundations have cracked, that is exactly how fortunes are lost. Sometimes, just preserving your capital is a winning strategy.
So, okay, we've talked about finding winners and avoiding losers. But what's the end game here? What happens after all the success and efficiency? This quote from Yuval Noah Harari is a serious warning about the side effects. Our relentless drive for efficiency can outrun our search for meaning, and that can actually destabilize everything.
And that's when the problem stops being about technology or finance. When you have massive displacement of labor, it's not just about income anymore. It becomes a crisis of identity, of purpose. And that creates a huge social and political risk that no business, no matter how successful, can afford to ignore.
So the ultimate goal here isn't just about squeezing out every last drop of efficiency. It's about building a sustainable advantage. The builders, the companies that truly last for the long haul, will be the ones who design for human value, who anticipate these social pressures, and who hedge against political risk from day one.
Which leaves us with this one final, really crucial question to think about. Yes, efficiency creates incredible wealth. But as builders, as investors, as citizens, our job is to constantly be asking, what might all this progress break along the way? Thanks for tuning in.